Once again, ladies and gentlemen, boys and girls. So what we're going to talk about today is what? How investors are benefiting from the Federal Reserve losing control of inflation. Losing control of inflation. Ladies and gentlemen, in this episode, we're going to walk down the latest jobs report that just came out yesterday. I think that was Thursday. Well, no, this morning, Friday morning, jobs reports came out. We saw the markets kind of slide. We're going to go over the jobs report. Then we're going to look at the Federal Reserve. Then we're going to have a conversation on monetary policies and how and what sector of investors are benefiting. And then we're going to have the investors that are really winning and the investors that think they're winning. All right. But ladies and gentlemen, if you haven't done so already, go ahead and make sure. Hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Once again, ladies and gentlemen, boys and girls and children, ladies, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming into you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we are going to jump straight into it. So the first thing I want to talk to you guys and girls about is we already talked about here. Let me pull it up. The jobs report. The jobs report came out today, and this is what I'm sharing on my screen here that you can see. This is from the Bureau of Labor Statistics, the Bureau of Labor Statistics. So with the Bureau of Labor Statistics, this came out this morning. This is when they put out their jobs report. So the total non-farm payroll employment rose by 235,000 in August, and the unemployment rate declined by 0.2% to 5.2%. The U.S. Bureau of Labor Statistics reported today, so far this year, monthly job growth has averaged 586 in August. Notable job gains occurred in professional and business services, transportation, and warehousing, private education, manufacturing, and other services. Employment in retail trade declined over the month. So right here, they're saying on average, we're looking at monthly job growth was at 586,000, and this time it was only at about 235,000, leaving our unemployment at about 5.2%, according to the Bureau of Labor Statistics. You can find this on BLS.gov. At 5.2% interest, this is a trigger. This is why this is so important to the Federal Reserve. Now we're going to switch over here. We're going to go to the Federal Reserve, see what the Federal Reserve is saying. Let's give me 1 second. And why this is so important and investors that are really winning. So right here, what the Federal Reserve is saying. Okay. So this comes from the Federal Reserve. They put this out on July 28, 2021. So the Federal Reserve has came out and said the committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run, with inflation having a run below this long-term goal. The committee will aim to achieve inflation moderately above 2% for some time. So inflation averages 2% over time, long-term interest rates, right about 2%. So essentially they're saying they want the inflation to be at 2%. We all know that inflation is running at about 5 or 7%. So inflation is running out of control. Why are we seeing inflation run out of control? And I'm going to put all this data together for you. Number one, we have stimulus packages, all that. Remember that $1,200 everybody got, then another $1,200, then $500 for this. Social Security, people are digging into the Social Security, PPP loans, these $1 trillion stimulus packages. All that means is a bunch of money is being pushed into the economy. When you have a bunch of money being pushed into the economy, you're going to realize that the inflation is at an all-time low, right? So when you're looking at a low, but all-time high, as inflation is running up, you're going to start asking yourself, why is inflation continuing to run this high? Because money is being pushed and thrown into the economy. Now, what does this mean? Now, we already just saw the Federal Reserve said that, hey, we're not going to touch interest rates until we receive maximum employment. When are we going to receive maximum unemployment? We don't know. Right now, at 5.2%, the Federal Reserve is losing control. They can't touch interest rates right now because unemployment is too high. When unemployment is being too high, that means that interest rates are going to continue to run. Now, as not interest rates, but as inflation continues to run, who the real benefiters are? Real estate. We can see real estate, the housing market is starting to go crazy. The housing market is jumping up all over the place. Why is the housing market continuing to run? The housing market is making the run it's making mainly due to the fact that we're seeing inflation go up. Now, real estate will start to taper off because I believe that as real estate continue to go higher, as the prices go higher, it's going to price a lot of people out of the market. But right now, the real estate investors, people who are around the real estate world, are the big winners right now because the Federal Reserve can't do anything about inflation besides one thing right here. I wish I had my drum roll queued up. But the big thing is, where is it at? Oh, I thought I typed it in here. There it is. Tapering QE, quantitative easing. So they're slowing down their quantitative easing. They're tapering off of the quantitative easing. So the government has been pumping money into the stock market. So they're tapering that off. They're slowing that down. And they can raise interest rates, but they can't raise interest rates, but they can start to taper. This is why we're wondering, like, oh, you seeing this tapering happening and tapering is going on. They're slowing down. This is one of the things the Federal Reserve is trying to do. So they're trying to taper the quantitative easing, meaning to stop putting as much money into the stock market. They can't touch interest rates because unemployment is still too high. It's at 5.2%. So they can't do anything with interest rates. So interest rates, and if they can't touch anything with their tools with interest rates and quantitatively easing, they're kind of sitting in the boat watching inflation go up. And as inflation is going up, you're seeing real estate investors becoming the real winners in this type of situation. Now, here's the thing where people think they're winning. Now, people who are in stocks, they're watching last year, they got 20% return. This year, everybody's a stock market analysis and everybody's just so smart on investing. Hey, I made this much money. I brought this company, it's gone up or whatever. And the real thing is, it's a difference between returns, total returns, and real returns. So total returns, let's say a total return last year, you made 20%. You're like, man, I did 20%. But if inflation was at, let's say, 10%, now your real return is really 12%. That makes sense? So for prime example, right now, people are thinking they're making money. Man, look at the stock market. It's having another great year. And their total returns, yes, they are making good money via their total returns. But the real returns, once they take out inflation, they're going to realize I'm not making as much money as after all. For prime example, let's say last year, stock market went up 20%. Inflation was at, let's say stock market went up 20% last year. Inflation was at 2%. That means the real return was 8%. This year, let's say the stock market went up 30%, but inflation was at 12%. What does that put the real return at? 18%, right? So you can see, even though, hey, I made 30% this year, your real return can be affected due to the fact of inflation. So as the Federal Reserve goes out there and they're losing control of inflation, it's putting investors in the real estate market into a good position to sell properties. Not great for buyers, but it's putting people who own pickup trucks, that was one of the highest places, they're putting them in a good position to sell their trucks. And they also put them in a great position to, for people who are selling their homes. And also people who are invested in the stocks, they're seeing that stocks go up. But guess what? Inflation is going up as well, hurting your real returns. All right. So I want to put that out there to kind of show you guys and girls how to look at what the Federal Reserve is looking for to raise interest rates, because they're the ones that control interest rates via monetary policies. Then you have the employee, the jobs report, watching that jobs report, watching unemployment numbers come out, watching what the Federal Reserve is doing, watching inflation, and you can see the sector of the market that's starting to move and having a great return. So anyway, ladies and gentlemen, that's going to conclude this episode. I thank you guys and girls who tuned in live. Don't forget to hit that like, subscribe, comment, and share button. Hit that notification bell icon. Y'all know what my name is, Prince Dykes. I'm the Prince of Investing. Until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe, peace, be safe. I'm out, and thank you.